So this is a sum of October, November 2021. Paper 31. Okay. Here they have given me that EN PLC is a manufacturing company, and this is the format of what? Can you all tell me what is this a format of?
The
Statement of changes in
equity.
Yes, this is a format of statement of changes in equity. So this is the balance that is there with us at the beginning. Then I have right issue of shares. Can you tell me what is a right issue?
A right issue is basically the issue of shares that the business makes
To whom?
to the shareholders,
Which shareholders?
the existing shareholders.
The existing shareholders. Okay. Then there is this dividend paid. We have bonus issue. We also have interim dividend paid. Okay, can you tell me something about this bonus issue? How is the bonus issue made? From where is the bonus issue made?
Miss, what do you mean?
In this bonus issue, if you see over here, the share capital has increased, right?
Right, it's made from retained earnings.
And the retained earnings has decreased. That means this bonus issue has been made from the retained earnings. Are you with me?
Yeah, miss.
If I make bonus issue from retained earnings, what does this mean? I can also make bonus issue from share premium, right? I can make bonus
miss.
issue from share premium also. Am I correct?
Yeah, you can.
Okay, share premium is called what kind of reserves? It is called capital reserves.
Yeah,
And
miss.
retained earnings is called what kind of reserves? It is called revenue reserves. I
Yeah,
can
miss.
issue bonus shares from capital reserves also. I can issue bonus shares from revenue reserves also. But dividend can be paid only from which type of reserves? Dividend
Only
can be
from
paid only from the retained earnings.
retained.
Okay. So if I am issuing bonus shares from the retained earnings, what does this mean?
It means that you're paying the shareholders.
It means that does this mean that I am trying to reduce the amount of dividend that is payable?
Yeah.
If I am using away, Arich, please answer, because I'm not having an idea. So if I am using away revenue reserves to give bonus, that means I am trying to reduce the amount that is available to me for payment of dividend.
Yeah.
Yes,
Yeah.
miss.
Okay, fine. Just keep that in mind, okay? Then I am paying interim dividend. I am transferring money from retained earnings to general reserves. There is revaluation of premises and there is profit for the year. Can you all tell me this profit for the year is which profit? The profit before interest and tax or profit after interest and tax?
Profit after interest and tax.
So that means you have profit before interest and tax minus interest, minus tax will give you profit for the year. Are you with me?
Yeah, miss.
So this
Yes, miss.
10 is which profit?
It's profit after interest and tax.
This 10 is the profit for the year. I
Yeah,
hope you are with me. This 10 is profit for the year. So I have read this question up till here, and I have this first question which is telling me state which bookkeeping entry has reduced the ability of the company to pay dividends legally in the future. Which entry has reduced the ability of the company to pay dividends in the future?
Miss. I don't know.
Okay, fine. You can pay dividends from which reserves?
Retain.
You can pay dividend from retained earnings. And dividend can be used only, retained earnings can be used to pay dividends. Dividends cannot be paid from any reserves. Okay. But what did the company do? They gave bonus shares from retained earnings.
Mm-hmm.
Yes. They have given
That's right.
bonus shares from retained earnings. That means they tried to reduce the retained earnings.
Okay.
If they try to reduce the retained earnings, that means they will say that they don't have anything, too much money available to pay dividends.
Yeah.
Because if retained earnings will reduce, the money available to pay dividend will also reduce.
Yeah, Miss. Right.
Yes. So state which bookkeeping entry has reduced the ability of the company to pay dividends.
Miss, the fact that they're paying from the fact that they're
Have debited the
paying
bonus
bonus
issue
shares.
from retained earnings.
Yeah, yeah. The fact that they're paying from bonus share instead of like share
Bonus
premium.
issue is
Instead of
paid
like share
from
premium.
retained earnings. Is paid from retained earnings. So what is the bookkeeping entry? They have debited retained earnings. Retained earnings is debited
Yeah.
for what? To issue bonus shares. This is the bookkeeping entry that has reduced the ability to pay dividends.
Yeah, Miss.
Arij, are you with me?
Yes, Miss.
Can you give me the journal entry to issue bonus shares?
Bonus share debit, retained earning credit.
Mm-hmm. Can you give me journal entry to issue bonus shares? Okay, when you're issuing bonus shares, are you increasing capital?
Yeah.
When you are issuing bonus shares, are you increasing capital?
Yes.
So share capital would be credit. Capital is always credit.
Yeah.
What will be debit? Is money coming in or we are using our profits?
Okay, yeah, technically, yeah, you're using profits.
So you're using profits. And over here, which profit have you used? You have used retained earnings. So the
Yeah.
journal entry to issue bonus shares is retained earnings debit, share capital credit. Are you with me? Because you have paid out of retained earnings. If you pay out of securities premium or share premium, what will you debit?
Then you'll debit share premium.
Then you will debit share premium. So if you are issuing bonus shares by using retained earnings, you will debit retained earnings. If you are issuing capital by using share premium, you will debit share premium. Are you with me?
Yeah, Miss.
Are
Yes,
you
Miss.
all both with me?
Yes, Miss.
Okay, fine. Now we have to start preparing the statement of changes in, the cash flow statement. I'm sure you all know the format of the cash flow statement. Do you or don't you?
Miss, I do.
Okay, fine. Now we are talking about the cash flow statement. We have to make the cash flow statement. Okay, as per IAS 7. So the first thing you need to know is that cash flow statement has three parts. What are the three parts?
Cash flow from operating activities.
The first part
Cash
is
flow from
operating activities. So what do I do is that whenever we do a cash flow statement, we will write the three activities, operating activities, then which activities? Investing
investment,
activities, and then which activities?
financing.
Financing activities. Okay, then financing activities. So what we will do, we write this and I want you all to write it along with me.
RMS.
Okay. In operating activities, we always start with what?
PBIT.
Profit before interest and tax. Yes.
Yeah, miss.
Yes.
I had told you that what we have over here, okay, the one that we have in the statement of changes in equity is which profit?
Sorry.
The one that we have in the statement of changes in equity is which profit?
We have profit at the end of the year, so we have to add interest and tax to it.
We have this profit at the end of the year, so the profit at the end of the year we have is 10. Are you with me?
Yes, miss.
But I want which profit? I want the profit before interest and tax. So what will I do? I will add interest, I will add tax. Are you with me?
Yeah, miss.
I want to go from
Yes, miss.
down to up, I will add the interest, I will add the tax. So come on, tell me what will be the profit before interest and tax? This profit for the year is there. In that you will add the interest, add the tax. So 10 is profit for the year. Now tell me what is the interest? Locate where is the interest.
Miss the first additional information. 3,000. Yeah, that one.
Okay. What is the interest? 3.
Yeah.
What else? Is there any other interest? Check. There is depreciation.
Miss, but depreciation doesn't count, yeah?
I'm just seeing if there is any other interest. There is
Oh, okay.
depreciation, there is machinery, there is something that is related to delivery
There's accrued
vehicles.
interest.
Now there is interest paid, you have to see. Company
Yeah, right.
issued 10% debentures and by the year end, only 6 months interest has been paid. So this was 3,000 interest. There is no tax. Company has issued 10% debentures. So 10% debentures, that is 10% of 200,000 is 20,000. And by the end of the year, how much interest have you paid?
6 months.
6 months. So into 6 by 12. So only 10,000. So add interest, add tax, add interest, add tax, but only which interest you will add? The one that you have paid. Are you with me?
Yeah, miss.
So
Yes,
you have
miss.
paid 10 plus 3. So come on. Sorry. By tax, profit before interest and tax minus interest. This is operating profit, right?
Yes, miss.
Minus dividend.
Yeah, miss.
Will give you profit for the year. Are you with me?
Yeah, miss.
Yes, miss.
Profit for the year is how much? 10. Yes?
Yes, miss.
Okay, what is the dividend that you have paid? 15. Are you with me?
Yeah, miss.
Yes, miss.
And what is the interest that you have paid?
3,000. Miss, it's 3,000, yeah?
Yeah. This is on which date?
This is on 31st December 2020.
31st December 2020. So it would be 10 plus 15 plus 3. But keep this also in mind, okay? Interest on debentures.
Yeah, miss.
10 plus 3 plus 15. So what is your profit before interest and tax?
28.
28,000. Now after this, what do you do?
Add non-cash expenses, depreciation and disposal.
So what will you add? You will add non-cash, non-operating expenses. What are your non-cash, non-operating expenses?
Depreciation and loss on disposal.
Depreciation and loss on disposal. So come on, depreciation. Go and check depreciation. Depreciation charges for the year. It's how much? 112. Depreciation charges for the year is how much? 112. Yes,
Yes, Miss.
they've given us directly. Now they've given us something related to disposal. Read the third adjustment. Read the third adjustment, please.
During the year ended 31st December 2020, some machinery was disposed. This had originally costed 92,000.
The machinery was disposed of for 47,000. So that means this is the selling price of the machinery. Yeah. Machinery is disposed for 47,000. Is this the selling price for machinery?
Yes, Miss.
Where will you record this? Investing activity, financing activity, which activity?
You in investing activity.
Investing activity. So disposal of machinery. Disposal of machinery is investing activity. Money is coming in or going out?
Coming in.
Coming in. How much? 47,000. Yeah.
Yes, Miss.
The reason why I make this bifurcation is that whenever I come across anything, I will put it over here. Whenever I come across anything, I will put it over here. Come on. I have disposed of the machinery. Selling price is 47,000. Original cost of the machinery is how much? 92,000. Accumulated depreciation on the machinery is how much? 31,000. So what is the net book value of the machinery? 92,000
61.
minus 31,000. The net book value of the machinery is 61,000. It is sold for how much?
47. So loss is 14.
So we have loss, and the loss on disposal is 14,000. Where will I record this loss on disposal?
Non-cash expenses.
So loss on disposal of machinery, 14,000. Are you with me?
Yeah, miss.
With this adjustment is over. Second adjustment is over.
Yeah, miss.
Yes. Let's go to the next adjustment. Read. Fourth adjustment. Read the fourth adjustment.
Several new delivery vehicles were purchased during the year at a total cost of 185,000. New machinery costing 106,000 was also purchased.
Which activity?
It's the investing activity. It was purchased.
How much purchase? 185.
Yeah, new machinery 106.
So total is how much?
Let me add it up one sec.
291. I will write it separately, no problem.
Okay.
So there is a delivery vehicle purchase, which investing activity. So I'm writing purchase of delivery vehicle. Inflow, outflow.
Also,
Then purchase of new machinery. Inflow or outflow?
Outflow.
Outflow. 165. Adjustment number 4 over.
Adjustment number 4.
Over. Now adjustment number 5. There is issue of debentures.
10%, so 20,000.
Which activity?
Financing.
Financing activity. Financing activity would be issue of shares, issue of debentures, and dividend paid. Okay. So there is issue of debentures. Inflow, outflow.
Outflow.
Inflow.
Oh, sorry, inflow.
Flow. 200,000. Interest paid. How much is the interest paid? For 6 months. Where do you write this interest paid?
Financing activities.
In financing activity, you will always only have dividend paid.
Okay.
So where will you write this interest paid?
Non-operating income.
See, cash generated from operations minus interest paid minus tax paid. Minus interest paid minus tax paid. Yeah, are you with me? So
Yes,
because
miss.
I get my net cash flow from operating activities, I'm not writing flow or used, okay? From operating activities, I will have what? Interest paid.
Yeah, miss.
How much is the interest paid for the debentures? I've got 10. And on
Yeah,
top, I
10,000.
had 3.
Right.
So total interest paid is 13. Are you with me?
Yeah, miss.
Yes,
Are
miss.
you with me? Okay, fine. Come on. This part is done, right? And this part is also done. On 1st January, I had a bank overdraft. Now this is still left. So I'm just putting it. Come on, go ahead. Working capital of the company, excluding bank account and accrued interest, increased by 45,000. What will you do? Working capital increased.
Okay, you added.
Now listen over here. I have non-cash, non-operating activities. Is there any non-operating income with me? Is there any non-operating income?
No.
No. So I will have profit before working capital changes. Can you all tell me what is my profit before working capital changes?
Mission working capital.
Plus 112 plus 14. Profit before working capital changes is 154. Yeah.
Yeah, miss.
Now I have change in working capital. That is, there is an increase in working capital. Increase in working capital. That means working capital is current assets minus current liability. Are you with me?
Yeah, miss.
Increase in working capital. That means you will take the rule for the current assets. If current assets increase, what do you do?
You subtracted.
Sorry? If current assets
Reverse it.
increase, what do? You subtract it. So increase in working capital will be treated as current assets, the rule. So what is the increase in working capital? 45.
Yeah.
So after you do your working capital changes, what do you get?
You get net cash flow from
Cash
operation.
generated from operations. What do you get?
Cash generated from operations.
Cash generated from operations. What is your cash generated from operations?
It is
154 minus 45.
45. Yeah.
So it is 109.
Yeah.
Minus interest paid. There is no
109
cash
minus
paid.
13.
You have cash flow from operating activities. 109 minus 13, you have 96, which is cash flow from operating activities. Are you with me?
Yeah, miss.
Okay, fine. Now what will I do? I will again read the question and I will see if I have any investing or financing activities. Remember, investing activities will be related to the non-current assets and financing activities will be related to issue of shares, issue of debentures, and dividend paid. I'm repeating. Investing activity will be related to which assets? Investing activity will be related to
The non-current.
non-current asset. Can you repeat? Investing activity will be related to
Non-current asset.
non-current assets and financing activities will be related to issue of shares,
Yeah.
issue of debentures and dividend paid. Come on. Is there any issue of shares? Is there any issue of shares?
Yes.
There is.
Which issue?
Rights issue.
Right issue. How much money you've got from the issue of shares? From this right issue, how much money you've got?
We have got 15.
How much of money you've got from the right issue?
180.
180. So where will I write this?
Financing activities.
Issue of shares. Or you can say proceeds from right issue. Money
Yeah, miss.
coming in or going out?
Coming in
Money coming in. How much?
180.
180. Dividend paid. Can you all tell me how much is your total dividend that you paid? I have paid final dividend, financing activity, right? And I have paid interim dividend. Dividend paid. Paid. Remember over here, in financing activity, you will record total dividend paid. But when you're finding this profit before interest and tax, you will only record the interim dividend because this dividend is of the last year. Okay?
Yeah,
Okay,
miss.
miss.
Okay. So what is your total dividend paid? Money is going out. 25 is for final dividend. 15 is for interim dividend. Yes?
Yeah, miss.
Okay.
Yes, miss.
Bonus issue. Is there any inflow or outflow?
Inflow.
Why? You receiving money when you're giving bonus shares?
Wait, no, you're not. My bad.
No, no money is coming in. Interim dividend is recorded. Transfer to reserves. Is there inflow or outflow? For transfer to reserves, is there any inflow or outflow? It is going from one and coming to the other. It is going from one heading of retained earning and it is coming to the other heading of general reserves. It is going from one heading of retained earnings coming to other heading of general reserves. Is there any inflow or outflow?
No.
No inflow, outflow. When you're revaluing premises, any inflow or outflow?
No.
No inflow, outflow. Okay. You have bank overdraft at the beginning of the year. Can you see this? This will come at the end. Depreciation is incorporated, adjustment 3 done, 4 done, 5 done, 6 done. The directors plan to expand the factory using fundraise, no inflow or outflow. So I have incorporated everything that is there in the question except this.
Yeah, miss.
Okay, so now I will start doing the total. Come on. Investing activity, what is it? It's positive or negative?
Positive.
Yeah, positive or negative?
Wait, hold on, my bad. I read the 96. It's negative.
So what will I write?
You're right, negative. I'll just
Net cash used.
Okay, net cash used.
Yeah.
Net cash used in investing activity. How much?
negative 305.
How negative 305?
Miss
187.
47. It's 47.
47 minus 187 minus 165.
Yeah, that's negative 305.
Okay. 187 plus 165, 352 minus. Have I done? 185 and 106, right? New machinery.
Miss, it's 165. Oh yeah, you wrote 100 and oh yeah, it's 106. You wrote 165 on accident.
Hmm.
Miss, let me calculate that again.
Tell me the amount.
Negative 246.
246.
Yeah.
187. Darling, this is 185, right? Why I wrote 187? I'm so sorry.
It's fine, miss.
So it is 185. And this is how much?
106. So it's negative 244.
Okay. We'll check again.
244.
185 plus 106 minus 47. 244. Okay. Financing activity. How much?
It's a positive figure.
What will I write then?
Net cash flow from financing activities.
Net cash from financing activities. How much is it?
340.
Arish, are you getting the same answer?
1 minute.
Yeah? Are you getting the same answer?
Yes.
340?
Yes.
Okay. So when you add all of this, you're getting positive or negative?
Miss,
Operating
let me calculate it.
plus investing plus financing.
It's positive.
Positive what?
192.
192. So what is 192? Nice. Net increase in cash and cash equivalent.
Yes.
Then what will you do?
You'll add the opening cash equivalents.
Okay, was it an overdraft opening cash and cash equivalent?
Yeah, it had overdraft, so it's negative 42.
So add cash and cash equivalent at the start. $42. So negative 1. So 152. So what will you get?
Closing
Cash and cash equivalent at the end. Yes.
Yeah, miss.
Yes,
You need to
miss.
be very alert. You need to write the headings and you need to see each and everything and see which activity it will go. So you got this. Come on. Looking at the cash flow statement, which is over here, let's see. You have cash flow from operating activities 96. You have used in investing activity 244. And you have cash from financing activity 340. You had an overdraft at the beginning and now you have a positive closing cash balance. Advise the directors whether or not the performance of the company is satisfactory. Tell
It is satisfactory.
why are you telling it was satisfactory?
Miss, it's because they had a positive cash flow.
They have a positive cash flow. Okay, what else?
Miss, the company is profitable. It's like making a profit. So that
The company is getting good amounts of operating profits. The company is doing huge investments. Yeah,
yeah, miss.
okay. The company is getting finances from issue of shares. At
Yeah,
the same time, the company is also giving bonus shares. They're also giving good amount of dividends.
yeah, miss, because they can afford that.
Okay, they're giving good amount of dividends. And by the time you reach the end of the year, you also have a positive cash balance. You can also calculate the return on capital employed, which says the profit over capital employed. Capital employed would be the capital plus non-current liability, and you have both of it, right? So you can also calculate the return on capital employed, and you could give a calculation for the same. If you don't want, you don't do this because you've already given 4 points. So looking at all this, we think that the company's performance is satisfactory. Okay, just take time, read this, and write your answer. Come on, I'm waiting for you all.
Alright, miss.
Write the answer. Discuss the decision to issue debentures to fund the planned expansion. Come on, tell me. You have issued debentures,
Yeah,
right? You have issued debentures of how much? 200,000. And these
yeah,
debentures you've issued to expand the factory during 2021. So you have to discuss the decision to issue debentures. Now, if you're issuing debentures, what is the advantage and disadvantage of issue of debentures? That is what they are asking you. Can you tell
miss.
me what is the advantage or disadvantage of issuing debentures to finance the expansion or for anything?
The company becomes dependent on borrowing, external borrowing.
When you are issuing debentures, you understand that your loan capital is becoming more. Your loan capital is becoming more and your own capital is becoming less. When your loan capital is more, own capital is less, that means you are in a high risk. Now, you have issued debentures of how much? 200. Can you see this? And how much is your own capital? Your own capital is 350. Can you see?
Yeah, miss.
Yes, miss.
So you are almost having debentures more than 1.5%, more than 1.5 times of your own capital. So by issuing debentures, you've increased your gearing, you've increased the risk of the company, but it is still low. Why it is still low? Because your own capital is approximately 350 and your loan capital is how much? 200. Yes?
Yeah, miss.
Yes,
Debentures
miss.
will have to be repaid. There will be interest irrespective of the profit. And if you do not pay interest, then it may lead to liquidation of the company. Debentures may require security. Okay? Yes or no?
Yeah, miss.
And
Yes,
if you
yes.
also have a very high bank balance, that means you've done a lot of, you were very early to issue the debentures because you still had 150 of your bank balance, if you can see over here. So you have to discuss the decision to issue debentures. Do you think it is wise to issue debentures of 200 when you have 150 of bank balance?
No, it's not wise.
So that you have to write in your own words. This is the marking scheme. I am waiting for you to write, and then tell me. And